Guaranteed to pay out, cash value, and tax-free loans. Today we are going to cover the basics of what whole life insurance is, how it works, and all of its amazing benefits that you usually don't hear about. So whole life insurance is a permanent life insurance policy that protects you your whole life, as long as those premiums are paid, of course. It doesn't expire after 10, 20, or 30 years like a traditional term life insurance policy does, and it has guaranteed death benefit for your beneficiaries or estate and accumulates cash value over time, which you can actually tap into, which is pretty nice, and we'll get to that in a minute. But some of the biggest misconceptions around whole life is that you have to pay for it your entire life, which just isn't true. You can actually structure a policy to be paid up in a shorter amount of time, like 10 to 20 years. These are called limited pay whole life policies, and some companies offer them and some don't. Now, these are a little bit more expensive to pay them up front, but once it's paid and it's paid in full, you're done. Most people like that option because they don't want to keep having to pay into these after into retirement when cash might be a little bit limited. Now let's talk about cash value, because that's usually the biggest topic around whole life insurance or any permanent policy, and it's where the most questions usually come in. So whole life insurance policies have a guaranteed savings component built into them. Whenever you make a payment, a portion of that goes towards the death benefit, and the other portion of it goes into a cash value savings account. Cash value accounts have a set guaranteed interest rate between 2 to 4%, yes, guaranteed. And on top of that, some companies will even pay out a dividend between 2 to 3%. The best companies for cash value and those dividends are going to be your mutually owned carriers. This means that you are considered a partial owner and that company is paying it directly from them to you. No shareholders or stocks involved. Now, the dividend is not always guaranteed, but some of the bigger and better companies have been paying out dividends every year for over 100 years. And even during the Great Depression, averaging 5 to 6%. Which is a lot better than your money just sitting in a savings account at your bank earning less than 0.5%. But see, you can also use these dividends and cash value to buy up more chunks of life insurance later in life, reduce the premium over time, or you can just leave it and let it grow with interest. Very flexible. Now, as the cash value grows, you can tap into and borrow it as loans from the company, which is tax-free. And if you don't put it back inside of the policy and you were to pass away, then that cash would just come out of the death benefit, which is collateral, which is pretty interesting. Now, these loans do have a very small interest charge, which usually balances itself out, because if the loan is 3 to 4%, but you're earning 5 to 6%, then technically sometimes you're still making money even while you're borrowing that money. And now that money is working twice. Maybe you put some in an investment and it's still technically growing inside of the policy. So when you go to put that money back, it's like you never took it out and it's still actually higher than when it started. It's still been growing with that little bit of interest, which usually balances itself out, and you are still making money even with a little bit of interest on top of it when you borrow some of that money out. You just have to make sure to set these up correctly. So cash value is a major benefit because it can be used for funding investments, retirement income, emergency funds, funding your child's education, and some companies even offer accelerated death benefit riders, also known as living benefits. Now, this doesn't come out of your cash value. This comes out of the death benefit, which means if you were ever to have a major critical or terminal illness like cancer, heart attack, stroke, the big three that wipe most people out and put them in debt for years, or you were to become disabled, you could actually use a large chunk of the death benefit while you're alive to pay bills and keep things going, which is also considered tax-free because it's a loan from your death benefit, which you technically don't have to pay back. I have a full breakdown of living benefits on the YouTube page. So most people opt into permanent life insurance because it's a very valuable tool to have for guaranteed tax-free inheritance for your beneficiaries, which is the most efficient way to transfer wealth directly to your loved ones. It avoids probate, unlike real estate, bank accounts, or other investments that have to go through the long and expensive legal process. Life insurance is fast, private, and no delays or court fees, making it one of the reasons most estate planning attorneys and financial advisors actually recommend it. If your estate is large enough, your heirs could face estate taxes, legal costs, or capital gains liabilities, which the life insurance could pay for while preserving your assets, your family home, business, farm, investments, properties, and so on. This liquidity can ensure that you never have to sell off any of your assets and can be structured inside of a trust for maximum tax advantages. So with larger amounts of whole life insurance, this is an amazing tool to build wealth and not just used for burial expenses like it was traditionally known for. But not enough people know about these benefits, which is why you should like and subscribe so that more people that are interested in this see this video as well. Shameless plug, let's keep going. Now, keep in mind that with all of these benefits, permanent policies are much more expensive than term life insurance policies, about 8 to 10 times more. So you always want to make sure that you have enough budget to fund these because you don't want this to backfire, which is why these are not for everybody. So I hope this video helped you understand whole life insurance a little bit more. I know it's a lot. So if you have any questions, please reach out, leave a comment, find a link somewhere wherever you're watching this. Let's get you some numbers, talk some quotes, and protect what matters. I'll see you on the next one.